Good morning. This is Larry McMillan with a stock market update on Monday, August 19th. So we had a tremendous sell-off and a tremendous recovery in a very short period of time, perhaps the shortest period of time in history. The S&P dropped tremendously until August 5th and then has completely come almost all the way back since then. It's more evident really in VIX, where we saw VIX go from 17 to 65 back to 17 in 2 weeks. It's never done anything like that before. 2 months is about the shortest period of time where we've seen a tremendous rise in VIX and then retracement. So right now the S&P chart is right on the verge of eliminating the last vestiges of possible bearishness. In other words, there were some peaks there in mid-July and early August, right around the 55.70, 55.80 level, and that's where we are right now. If it breaks on through here, then I'd say we're pretty well going to do move to new all-time highs. There's still, a minor chance, I would say, that the market does top out here again and we retrace. Part of the rally was news chasing. There was good interest news from the PPI and the CPI and the unemployment report. So traders who follow that sort of thing were pretty much excited about that. And since the market had already sold off, they figured they were getting bargain prices. That's sort of gone now. So this week, the market doesn't really have a lot of news items like that to rely upon. Let's take a look at the other indicators. The McMillan volatility band buy signal is still in place, and its target is well above current levels. However, equity-only put-call ratios have not confirmed a new buy signal. They're still on their previous sell signal, and that's according to the computer analysis programs that we use to analyze those charts. So right now, that's an indicator that I would say is moving towards bullishness, but hasn't gotten there yet. Breadth has been very strong, and the breadth oscillators are in overbought territory. It's okay for them to be overbought when the market is rallying strongly on a new upward leg, which even though it's a long upward leg already, it's still new. So the breadth oscillators are bullish. The new highs and new lows, that indicator has now gone back into action on the buy side. It's bullish for stocks too. There's been more than 100 new highs on the New York Stock Exchange for the last 3 days in a row. The VIX has come down a lot, as I mentioned, and it's just about to go below its 200-day moving average. Hasn't quite done it yet. But if it does, that would stop out that trend of VIX sell signal that happened a couple of weeks ago. And as a result, that would be quite bullish because there's already a spike peak buy signal in place from the VIX indicator. So again, that's an indicator that's moving towards bullish. The 200-day moving average of VIX is right around 1450, so it would have to close below there for 2 days in a row in order to negate that previous sell signal. The construct of volatility derivatives, I had considered that to be a worrisome thing a couple of weeks ago, but that worry has passed, and now this indicator is back on the bullish side again with respect to stocks. So overall, most of our indicators are bullish or moving towards bullish. I would say that those moving towards are the S&P chart itself, the equity-only put-call ratio, and the VIX spike peak sell signal. So if those all turn bullish as well, then there's really nothing holding this market back. In any case, we're trading the individual signals as they occur and then rolling our positions up when they get deeply in the money. And we will continue to approach things that way. Meanwhile, I invite you to visit our website, and other than that, have a great week trading.